SBR is not about debits and credits. It's not about consolidation. It's not about reporting. It's about you as, let's say, a CFO, planning, understanding how your financial statements are going to be perceived by investors, by the users of the report. And IFRS 8 is the standard that is tested quite frequently in these type of questions. So the things that you may be required to talk about is that intersegmental trading distorts the picture. So users open the note and they see that revenue is that huge, and they compare it against all the companies' intersegmental information, and their revenue is not that huge. But that is just because how your management accounting works, what your, let's say, internal markups are. And this makes the reports not really comparable against others. Another problem is that companies are going to split operating segments differently. Someone is going to be paying more attention to geographical issue. Some of them will look more at the product. So we will have companies that operate in the same industry, but their chief operational decision makers are going to analyze the information differently, and that is going to be presented differently in their IFRS 8 disclosure, and this will confuse the users. The segments quite often are over-aggregated. Yes, on one hand, we want to make sure that we don't obscure the important information, the relevant information, by overloading users with the columns, right? But sometimes segments with characteristics that are not very similar are over-aggregated, and for huge companies, for large entities, it may be impossible to aggregate them nicely using the criteria for aggregation. There could be a problem that there are common costs. So you would need to say that the investors are going to look at different segments and use that information and whatever they expect from the industries to predict whatever is going to happen. But companies may have different allocation of operating costs, like let's say head office costs, and that would mean that the perception will be distorted. And you will have questions more likely than not when there is someone, a CEO, that says, no, I don't want to disclose this information because this is very sensitive. And you would need to talk about the fact that, yes, despite the fact that some users will see the real performance of the segments, and this may hurt the business, but still IFRS 8 requires so that the users of the report would get a better understanding, would be able to make better predictions of how the company is going to work overall. Why would it be important? If we have a company that, let's say, consists of two parts of business, and let it be food and let it be clothes retailing, and if we expect clothes retailing to rise and food sales to decline, we need to know the proportions, we need to know how they are doing in order to be able to predict in a better way whatever is going to happen with the combined entity. So, IFRS 8 is going to be tested very often. As we have already discussed, you need to be able to talk about the operating segment, and you need to be able to talk also about the problems and about the perception of the financial statements and the disclosure of IFRS 8. And I will see you next for SBR Made Easy, where I, Lilia Kirilenka, explain to you, make you focus on whatever is the most important for this very exam, and join me for my SBR course, which has fantastic pass rates, and participate in my weekly SBR quizzes on my LinkedIn profile. Bye!